And we do talk a lot about strategies and technical analysis and stuff in the room. All right, so first thing I got to do, of course, is get the disclaimer out of the way. All the signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, and you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so I won't be giving financial advice. All right. If, by the way, you have any questions, as I said, you can pop them in the question box or in the chat box. You can also put in your name and phone number or your Skype username in the chat box. And if anything I can't answer, Rory will give you a call later on after the webinar ends to follow up with you on that. And just call you once. It's not a marketing call. It's just for folks who are interested in the services or any specific questions related to Right Line and its services. Okay, this is just kind of a graphic on what's called the SPY super system. It's one of the systems I use in the room to trade the SPYs and the Qs. I'll cover that a little bit later, but this is kind of what it looks like on the what the Compass system looks like. The Compass system is a system that we Right Line has to find institutional trading when institutions are in a trade or when they're not. We do that by looking at the Compass system, which runs on my platform. It runs on ThinkorSwim. It also can be put on Ninja. So we'll talk about that. And this is just a kind of a graphic of what the alert service looks like. It's an SMS alert service, comes up on your phone, and I'll go over the alerts and what's included in them. But they're very quick. I have them on my phone too, so I know that they're coming through okay. I usually get them in about 15 to 30 seconds after they're posted. All right, so first thing I always talk about before we get into the actual details of the webinar is what drives the market, what drives market trend. And it's really important to understand. Myself, and I'm assuming everybody else here today, is what's called a retail trader. These little marbles represent retail traders. We, as retail traders, we can't move the market. We don't create trends. We can't reverse trends. We don't have anything to do with actually moving the market and making the market trend or not trend. When we're in the trade, when we're trading and by ourselves with no institutional money in there, what you get is you get a lot of chaos, you get a lot of chop. You basically get an untradeable market. Very, very difficult to trade. So we don't want to be in a trade when the retail traders are mostly in the trade. This is the institutions, this big marble, and this is what drives the market. When the market is moving and trending one way or another, this is who's doing it. Now the institutions it's made up of investment banks like Goldman Sachs, JP Morgan, Morgan Stanley, a lot of big banks. But it's not just the banks, it also includes hedge funds. There's hundreds and probably thousands of hedge funds. These funds have billions and billions of dollars, just like the investments bank too. So they're institutions. They can move the market with the amount of money that they have. There's also pension funds, big state pension funds. Those are massive, billions of dollars in those. And then you have mutual funds like T. Rowe Price and Vanguard, massive mutual funds with, again, billions and billions of dollars to move the market. So this is what the institutions are made up of. Now, most of the investment banks all have things called algos, which are computer programs that also trade, and they look for specific setups and specific criteria, and they can be lots of different ones to trade with, and they trade automatically, and that's where most of the trading comes from, are automatically generated trades. They're not by people like us clicking the mouse. They're automatically generated by these algos. Now the algos can look for lots of things. And one of the things that's happened over the last 5 or 6 years is the institutional banks have created algos to try to mimic what retail traders are using. Like if you use like a MACD cross or look for RSI and trade when something's overbought or oversold, they can identify those situations. And what they've done is they've created computer programs to find those situations when they occur. And when a MACD crossover they'll get in there and make it look like the MACD cross is going to work till they can suck in the retail traders, and then they immediately reverse on that thing. So in case you've been in any trades that look like they should have worked because it was some criteria that you were using technically and it reversed on you, a lot of times that's the algo. So the algo is a driver of this as well. So our job as a retail trader to be consistently profitable, then what you're looking for is to identify when the institutions are driving a trade and when they're not. And it's important for us to know this. So that's what finding highest probability trade setups is all about. And that's what the Compass system does for us. Question here, how is my approach different from David Kushner? David does he uses Ninja. He uses a much faster time frame than I do. His trades are short-term trades, very short-term, based on his specific criteria that he uses, using the what's called the money flow program on Ninja, which is basically the same indicators that we use on ThinkorSwim for the Compass system, but he's looking at much quicker time frames. I trade off of 5-minute and daily charts. I don't take trades that are scalping type trades. We're not going to be in there for two or 3 minutes. We're looking for trades that are going to last, anywhere from a couple of hours to overnight to several days. Okay. And Bob, there will be a recording of this as well. Yes. All right. So what I've got here is I've got a couple of SPY charts, and what I'm using this for two different things. These are the SPY regular candles, and this is from a while ago on the I think back in February here. And this is what the SPY has been doing, and you see this nice march up here in the SPY. This is why trading was so it might have seemed easy to everybody because we had a fairly consistent move up here. Now this is a SPY with regular candles. I just want to introduce you to what Heikin-Ashi candles look like. And this is my TC2000 platform, by the way. This is a charting program I use. This is not the Compass system on ThinkorSwim. I'll show you that. This doesn't identify the institutional trading. The Compass system does that. But this is what regular candles look like. Now this same time period right here, this is regular candles now. You see how we had that nice move up in the SPY? And people have been saying how difficult the trading has become in the last couple of weeks. If you've noticed that, a week ago Thursday, we had this big, huge bearish engulfing candle right here. This candle that's pink on my platform. I have my colors coded for specific reasons. But that was a warning sign. And you can see what we've done since then. This is when the trading has become so difficult. These are the regular candles. And you see how we've come down, down, down. And we notice we get close to the 100-day moving average, but we didn't touch the 100-day moving average. This could be fairly significant. The 100-day moving average usually gets touched and bounces off of it before a market reverses. It doesn't happen every time, but we have to be aware of that. Hold on just 1 second. Sorry about that. Had somebody come to the front door. So this is why the trading has become difficult. And a lot of these stocks and these candlesticks in the morning, they gap up or gap down and then move sideways. So for intraday trading, they become very difficult. So I've cut back on quite a bit of our trading. We had a tremendous month in January, February, and then we've been cutting back on our trades. And we're still profitable, but you can't make as much in a market like this because it's difficult to go short because of the fact you've got so much support here. Now, these are the regular candles, and these are Heikin-Ashi candles for the first chart I was looking at, the trending chart early that ends up in February, right? But you notice how smooth you can see this. And here's the Heikin-Ashis for the way it is now. We're going to get into these, and you can see how they're constructed differently than regular candles. There's regular candles here. That's Heikin-Ashi candle here. There's a regular candle here. So we'll go into the details of how these are constructed and how to use them. All right, so in the room and for the alert service, I have rules to trade by. First thing is we trade the best and skip the rest. And this is kind of a catch-all. We're only trading the very highest probability trade setups. And I go into a lot of detail as to how I find the best and how I skip the rest. This is really important. We don't want to be in mediocre or trades that are that are 50-50 trades, we don't want to be in those. We want to only take the very best trades that we can find. And again, this is another key, is our objective is not to make trades, our objective is to make money. It sounds basic, but a lot of traders have a lot of problems when they're trading, when they're sitting in front of their computer. They have a lot of problems not taking trades because they get anxious or they get bored. They feel like, okay, this trade looks pretty good, I'll take this trade. This is really, really important. You do not want to be trading to trade, and that's what you're doing if you're taking something that you don't have an edge in. You're trading to trade. You're not trading to make money. And these trades that you make that can bleed away a lot of money over time, even if they're just small losses. So that's where we start. So to be a profitable trader, we need an edge. We need an edge over other retail traders. Now, keep in mind, we're trading against other retail traders. We're not trading against institutions. You're not gonna beat the institutions. You read a lot about this Wall Street bots and everything that they're going to beat the heck out of these out of the institutional traders, the banks, the hedge funds. It's not happening. It's not going to happen. The institutions are the ones that move the market. So our job is to basically follow what the institutions are doing and have a better strategy and better indicators and more knowledge than the other retail traders, so that we can take money from the other retail traders. That's what we do. So again, our edges, we use the right line compass system. This is a key. This tells me whether the institutions are in the trade or not. I don't want to be in any trades. When I enter it, I want the institutions to be in that trade as well. We trade what's called relative strength and relative weakness. This is really important. And that's not looking at RSI. That's looking at what is the stock doing on a 5-minute chart versus what's the S&P 500 doing, what's the SPY doing at the same time. If the SPY is going sideways and down, and you have a stock that's moving up on the 5-minute candles, it's got relative strength, and vice versa. So this is really important because it's going to give you a much bigger edge when you're in a trade and you go long and the stock's got relative strength to the SPY, and the SPY is going sideways, for example, and the SPY turns around and head down, your stock is very unlikely to move down as fast as the SPY is, because it had relative strength to start with, and it gives you the ability to stay in the trade or exit the trade quickly without taking any kind of a loss. So that's really important. We also want to trade with the market trend if there is a market trend. Market trend is a lot of during this last couple of weeks, the market would gap up, gap down, and then it would pretty much shop around the rest of the day. So there wasn't any market trend to trade with. But if there is a market trend, a bullish or a bearish trend, that's the direction we want to trade in. And the last one that we use a key on is to buy near support, sell near resistance. In other words, this whole point is not to chase trades. Don't be chasing trades. You see a bunch of big green candles stacked up in the morning out of the gate. Try not to be chasing it, because you have a high probability of getting trapped as it reverses. And if you wait for that to come back to a support level and then reverse and head back up again, then you're in a much, much better position on that particular trade. And that's one of the key things of how using Heikin-Ashi candles work, to identify these reversals back into the original trend and have that confirmed. All right, so that's the edge we need. To talk about how we know about if the institutions are in the trade or not, we use the compass system, and it identifies the highest probability trade setups, while sidestepping setups that look good but will fail more often than they succeed. And that's because some setups can look really good, but if it's not being driven by institutions, they're very susceptible to failing. And the compass system does this by identifying when institutions are driving the move and when they're not. And I'll show you some of the how the charts look on the compass system. It basically, the compass system, it goes in and analyzes a lot of really complex trading data and displays the results in an easily identifiable visual format. This is important because it's going in and looking at lots and lots of information, indicators and et cetera, over multiple time frames to determine what's going on. But then it displays it basically in colors that you can see on the chart. So even for a novice trader, it's easy to see whether a stock is bullish or bearish and whether the institutions are driving it or not. And that makes a big difference, because you can find the best trades by doing that. So again, getting an edge over retail traders, this is what we really need to do. Who are the institutional traders? We only take trades that are being driven by institutions. That's key. We obviously trade stocks with relative strength or relative weakness, and I repeat this over from before because these are important criteria in trading in the direction of the overall market. You'll hear this from me 3 or 4 times today because these are what you want to do. If these things don't check, then you're going to be taking trades that don't have a high probability of success. So again, our trades are going to be supported by institutional buying or selling. They'll be outperforming the index, the SPYs or the Qs, and they'll be moving in the direction of the overall market. Very big edge. You're trading with the trend. I'm sure you've heard, traded with the trend. This is what we're doing, but we're adding to that by making sure the trend is being created by institutions. All right, so this is what I call a basic highest probability trade setup funnel. I have a video on this, but it's just kind of a visual way to see how you find the best trades. And these are the criteria I go through when I'm looking for a trade. The first thing I do is I have to look at the daily chart first and then the 5-minute chart. So if I'm looking at a bullish setup and I'm looking to go long, my daily chart has got to be bullish. I'm not going to be taking any nice looking 5-minute charts that are bullish if I've got a bearish daily chart because I'm trading against the daily trend. So those two have to align. Then I want to trade with the stock trend and the market trend if there is a market trend. So it's the stock trend. If it's lined up daily in the bullish, the stock trend is going to be bullish. So I am trading with the trend of the stock. Then the next thing is, as I look at the stock, I've got to see if the compass indicators are aligned. Are the institutions moving this trade or are they not moving this trade? If they're moving the trade, then that's another checkbox. I can take that trade. Then I check for relative strength and relative weakness that we talked about. Is it outperforming the SPY for the long? Is it underperforming the SPY for short? And then is the stock near support or near resistance to enter? If I'm going long, it needs to be support. But if I'm going short, it needs to be resistance. And if it isn't, I can just set an alert. That's what I usually do. Just set an alert. And when it gets to my support or resistance levels, I'd be alerted to it. I'll look for a reversal back into the original pattern, and I can take the trade. But if you just drop your trades through this kind of a checkbox setup, the ones that come out of the bottom will be the ones that become prospects for you. Not necessarily trades will take, but they're prospects. So again, this is just a written form of that funnel. So again, we identify the market trend, but these are the key things. Stock should be traded. It has to have a daily and 5-minute chart aligned, and the compasses indicators must be aligned. These two things are critical. If you've got these two things, you're off to a really, really good start. And the rest of the ones that we covered here. One thing on the 5-minute chart, I keep the VWAP, the volume weighted average price, on there. This is a very, very key component. The institutions use this all the time. The algos follow this thing. The algos will enter a trade as the stock breaks up through the VWAP, and they'll short it as it breaks down through the VWAP. So you want to have the VWAP on your 5-minute chart, and I'll show you that on the chart that we have. And you should only trade long if the prices are above the VWAP. You should only trade short if the prices are below the VWAP. And again, enter trade near support and resistance. Talking about that. And the key thing here for trading is having patience. This is probably the hardest thing for most traders to do, which is to actually be patient. Wait for the trades to come to you. Wait for them to set up, and you'll be much, much better off. And this is a very hard thing to do. Again, that comes from the what we had said, which is our objective is not to make trades. Our objective is to make money. All right. So in the room, in the options room, I have, as well as the alert service. These are the kind of trades that we take. I don't do scalping or hyper scalping. I do take some fast trades in the SPY and Q sometime. That's called the SPY super system. But generally speaking, for what I alert out and what we taught in the room, we're going to be doing straight calls and puts. We're going to do debit spreads, and I use weekly options expiration in this. And every one of these things I have videos on to explain how the strategy works and why it works. But I use weekly options expiration on debit spreads. I do what's called a time spread over earnings. That's the only earnings trade I take, is using it's basically a calendar spread, but we call it a time spread. It's a non-directional trade. We don't care whether the stock goes up or go down. Our job with a time spread is to capture the volatility crush when the premiums drain out of the options when earnings come out. And we also have a strategy called the weekly ATM strategy. This is a neutral to bullish strategy, so I'm not using it right now, but we've used it in the past very successfully. And this basically allows us to sell premium week after week against a further out in time dated long put that gives us a spread, but we can just keep selling puts against it every week to pull in premium. And I do a lot of credit spreads, regular credit spreads, to capture premium over for a few weeks. And the SPY super system I talked about, those are quick trades that we take in the room based on institutions buying or selling the SPY, and it's at a support or resistance level, and we'll grab those kind of trades, and it can be pretty quick. Couple questions here. How do I define relative strength and weakness, please? And what's the VWAP? I'll show you what the VWAP is, John. VWAP is called volume weighted average price. I'll show it to you on the charts that I have for ThinkorSwim. And how do you define relative strength or relative weakness? It's really basically, I mean, there's the calculations you can go through, but basically what I do is I just look at the chart and I look at what the SPY's been doing for the last half an hour, and I look at what my stock's been doing for the last half an hour. If the SPY's going sideways or down, and my stock's been going up consistently, this got relative strength. I just use a visual on it, and I can you know, it's not really that complicated. AP and VWAP means it's volume weighted average price. The AP is average price, and it's weighted by volume. Very important that this level is very, very important. Institutions use it, the algo programs use it, and we use it. Okay, so those are the strategies we use in the options room in the alert service, and just so you know what's coming. Now we'll talk about the alert service here. It's designed obviously for day trades and short-term swing trades. This is not this isn't an investment program. We're not looking to take trades 6-7 months out, a year out, something like that. These are for day trades, intraday trades, and short-term swing trades, which I define as overnight or usually 3 or 4 days. Sometimes they'll go 2 weeks or so, but that's basically the duration we're in on these trades. And it's obviously designed for traders who can't or don't want to watch the market all day long. You don't want to watch. You'd like to get these trades that are high probability, but you can't be sitting in front of your computer. You don't want to be sitting in front of your computer. You work. Then this is the kind of service you would want. And the alerts will be coming out. These are going to be real-time alerts, and they're going to be on the highest probability trade setups. I should mention that every trade that I call out in the room, and I don't alert on every trade I call out in the room, because if it's 3:45 in the afternoon, I can't really alert. It's not fair, because it's going to be too late for a lot of people to get in. And if they're really quick trades like the SPY super system trades, I can't really alert on those. But every trade that I call out of the room and every trade that is alerted, I trade those all with my own account. I'm in every single one of those trades. You know, I get a lot of people will tell me in the room, you know, in a certain trade, Microsoft, we're down money in Microsoft, and I say, I know it. I'm in the trade. I can see the P&L. I don't have any, you know, I'm aware of all these things. So I take all of those trades. And again, we take the highest probability trades by identifying institutional involvement in the trade. Very important. And then I look at what's called market internals, which identifies when there's a lot more people buying or selling than normal. You know, if the market internals are neutral, so just about as many stocks going up as going down, then it's a neutral involved in neutral, and I focus on the institution's involvement. But if the market internals and the institutions are telling me it's bullish, then I go into some technical analysis to find the best trades. All right, so that's what we're looking for. Now this is just a P&L. I should probably update this thing, but this is like a quarterly P&L for the last. I think this is actually last fall, so I need to update this. But this is typically what I expect. I'll show you some of our results in the room, and I base this on $2,000 a trade. All right, and question here: would you suggest day trading E-mini? What time frame? VJ, let me tell you what my opinion of. I personally, now I trade futures, all right, but I personally think, especially for traders who are fairly new, that aren't really seasoned, I personally think that you're better off trading stocks than, options on stocks than trading the E-mini or the NQ. And listen, this is just my opinion, but when you're trading the indexes, like the EQ, NQ, or the ES, or the Russell, or gold, or anything like that, oil, you don't. The one thing you don't have that we have when we're trading stocks is you don't have relative strength, relative weakness to use, because the indexes themselves, that's the baseline. I mean, you can't use. There's nothing you can compare the ES against the ES unless you're just trying to compare it to the Qs or something. But they don't have relative strength, relative weakness. Stocks, or the options on stocks, do have relative strength and relative weakness, which is why I prefer. Now, I will buy SPY puts and SPY calls during the day for the SPY super system, but again, there's no relative strength, relative weakness edge that you've got. So I found that it's easier and less stressful to trade options on stocks than it is to try to trade the E-mini. Remember, the E-mini moves a lot. There's a lot of leverage there. It can move pretty fast. You can have some pretty wild swings. And typically, you're going to be trading the E-mini. You're going to be trading on a really short-term chart. All right, that's my opinion. When I suggest for day trading E-minis, what time frame would you use for E-minis? Well, frankly, it depends on the strategy you're using. When I trade this, when I take the SPY, which it's just basically the same thing. If I take the SPY and I'm looking to trade it, or I was going to trade the E-mini, I'm going to look at a 5-minute chart and I'm going to base it off the 5-minute chart, and I'm going to stick with it on the 5-minute chart. But most people that trade futures are down to much shorter time frames or different structures. They're going to use minutes, or they're going to use based on how much volume's coming through. So there's lots of different ones, but I stick with 5 minutes on those. All right, so this was our trades in September that we took in the room. And the reason I show this is this isn't something just to brag about. There's a couple of reasons I want to show this, and I do this for each of the months here through. But what I want you to notice is the percentage gains that we take, and notice we have losses, a couple of big losses in here. But notice the percentage gains we take are, generally not huge. And the reason I point this out is because a lot of services will tell you that you can turn $5,000 into $5 million, or $5,000 into $50,000 in a month because of all these 300, 400, 500, 600% returns they get. You can't do that consistently. It's not going to happen. So I want everybody to be aware of what you're looking for. This is the kind of returns you're going to see is 43%, 23%, 32%. These are the kind of returns that are going to come through on the trades that we take. We had a nice 108% win in STX. FISA 22, but you can see that that's pretty consistent, and you're going to see this as I move from month to month here from what we did. And this was September. We did 25 wins and 2 losses, a 92% win rate. If you invested $2,000 in each one of the trades, it created a profit of $77.88. It's pretty good. And I do note that September trading results were really good because it was a very difficult trading environment. It was very, very difficult to trade in September. There was a lot of choppiness in the market. And the profitability that you get is going to be dependent upon the market, because a trending market is much easier to stay in trades, and you typically will get bigger wins out of it. But this was September. We switched to October. You can see, again, the same kind of things here. 32%, 20%, 33%. And we had some losses spread in here. We always have, well, I shouldn't say we always have losses every month. We have had months with no losses, but they're very rare. But typically, this is what you see. My win rate typically runs between 85 and 92% generally. I mean, I've had months that have gone lower than that. I've had months that are gone a little bit higher than that, but about 92 is max. This was nice one here, 43% on this RH, Restoration Hardware. JD 61%. Here we had a scratch in DG. So again, this was the time spread here, 28%. So you can see what the percentages look like. That was October, 24 and 4, 86% win rate. 2,000 invested, produced 4480. Didn't produce as big a results as we did in September. That was because of the market. We were able to get into some trades when the market was trending up during the day, and we were able to stay in them a little bit longer. November, and again, same thing here. You can see percentages, they don't change an awful lot. that's what's being consistent is really important. But again, you can see here, this was a strangle. We had 30%, but again, 15%, 22%. We had some losses in here. Yeah, this was basically a flat. That was 1.2%, nothing. But we had to put credit spread here. So I mix in all the different kind of trades. The particular trades I take are the kind of strategy that I use is dependent upon the market conditions. Right now, in a market moving down like this, you're not going to be taking credit spreads to trade something. You're going to be looking for more non-directional type trades for the most part. Short-term intraday trades and non-directional trades. All right, so this was November, 21 wins and 4 losses, 84% win rate. 2,000 invested, produced 5160, not bad. December, very few trades, very, very slow month. Holidays coming up, and we just didn't take couldn't find a lot of good trades. We only took 16 trades. Still 87% win rate, and 2,000 invested, netted like 3115, pretty small for our normal setups, but this is what the percentage, but again, you can see the percentage doesn't vary that much here. We had a nice 63% in Microsoft. We took Microsoft a couple of times. All right, January trades. This was 20 wins and 2 losses. This was a pretty big month, a pretty good month for us. This Gilead loss that we took, the 2 losses we took actually occurred in February, but the trades initiated in January. So I basically, they weren't showing up in January, but I put them into January because that's when I executed the trade when they started. But the trade, we had 20 wins, 2 losses, 90% win rate, 2,000 invested each trade, and netted 7505. Pretty good month again here. 1 to 2 trades a day, it looks like, Peter. That's probably pretty close. It depends on the market. Sometimes you go the alerts. I don't think I put an alert out for a couple of days, but in the room sometimes there'll be 1 to 2, maybe 3 trades in a day. Not an awful lot. February, this was February. I started to break out the alert service here as well. But again, just to see the percentages, here you see 40%, 25%, 56%. That doesn't vary an awful lot. But we had a really, really good month. We had a 92% win rate, 24 and 2. These are our 2 losses here. And 2,000 invested in each trade and netted 11,745. So pretty good month. But you see, we didn't take that as any more trades than we usually do. But again, we were able to stay in trades. The market was helping us. February, as I showed you in that SPY chart, February was trending up. We had a really trending market that you can trade. So it becomes good, and you want to take advantage of it. On the alerted trades we sent out in February, we sent out 20 wins and 2 losses. So there was fewer trades, but just by 4. And that's a 90% win rate. And the 2,000 invested in each trade netted 6930 because I had some trades that I took that I can't really send out on alerts. They're too quick. It's the strangles mostly. But that was the service, and that's what it was for February. I wanted to. These are some of the actual alerted trades. I wanted to identify some of the alerted trades so you can see how some of them are intraday, some of them are overnight. This was CRWD. We get in for 690 out at 8. This was an overnight trade. Produced 16% profit, $330 profit. STX, this was the big one we had in at 370, out at 770 in 2 days, 108% profit. But these are all, you can see that these are actually alerted trades. And you can see that it doesn't vary much percentage-wise from what I showed you in the room, 50%, 30%, 38, 43, 45. And these are even more recent ones. The workday we did fairly recently, in for 1170, out for 1470, 26%, 24%. This was a credit spread, 40-cent profit out of the maximum 50 we could have got. So this just kind of shows what the alerts have been. I did recap my first quarter. I haven't been able to put together all the numbers for March and April yet, but first quarter in 2024, trading room, 65 wins, 11 losses, 86% win rate for these 3 months, 18,000, a little over 18,000 profit. If you put 2,000 a trade, that's an arbitrary number that I use just to have something to compare it against. And the alert service, 41 wins, 6 losses, 87% win rate, 12,224. So those are the results from the first quarter. This is the results from 2023, the entire last year. And again, investing $2,000 in each trade that we took in the Compass Options room produced a profit of a little over $60,000. If you had an account balance of $50,000, again, these are arbitrary numbers, but if you had an account balance of $50,000, each trade when you started the year used 4% of the account balance. If you put 2,000 in, that's 4% of your account balance. And the percentage gets lower as the account grew. It produced 120% return on the initial 50,000 account, growing the account to a little over 100,000, 110,000 at the end of the year. And at the end of the year, the $2,000 trade, if you were putting the same 2,000 into the trades at the end of the year, that was less than 2% of your account balance at the time. So this just kind of gives you an overview of how we produced for the last year. All right, so let's talk about the alert service and what you get with the alert service. When the alerts come out, you're going to get the stock symbol, obviously, the option strike price, you're going to get the option expiration date, and the price to pay for the option. And if it's a spread, all of that information will be in there for you. And the price to pay could be a range. You could say from $1 to $1.05 or $1.10 to $1.20, something like that. And I would recommend that when you get the alert, if the prices move too much, don't chase it. Just put the order in at the price that we alerted on. Wait for the stock to pull back. Most of the time it'll pull back and you'll still get filled. And I usually don't send out the sell order at the same time. I usually wait. I'll wait until I check the price action. It could be later that day, could be 2 or 3 days later. But I'll send out an alert that'll tell you that this is where you want to try to sell the stock at, or the option at. And when you get the sell order, you want to add the note to be good till canceled. You want to make sure that it's good till canceled. So if you're not at the computer in the morning or you forget about it, if the market opens gaps in your favor and it could get filled, you want to make sure that it's working when the market opens. Okay, so I want to go over how we get these kind of results that we're getting. And again, I told you we're looking for the highest probability trade setups. So again, we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We only take trades when both of these are in our favor. That's not really true. I'll take trades when the institutions are driving a trade and the market internals are neutral. The market internals don't have to be bullish for me to take a trade. If I feel the institutions are driving the trade, I'll take it anyway. If they're both in our favor, we'll take them, obviously. So again, we only take trades when both of these are in our favor. That's a caveat. If the institutions must be in the trade. That's the one thing that has to be occurring. And again, how we find this institutional money flow, we'll talk about that. I have 2 systems I use for that. But when we're looking for these institutions being there, looking for the market internals and the institutions, this allows us to enter the trade strategically. We're looking at technical analysis as well. So this is how we get these. This is how we get these trades. That's why we have so few trades, because we're only looking for the best. And how do we find how does the Compass system identify institutional trading or institutional trades? This is really what it's looking for. It does what's called a triple screen assessment. Triple screen assessment is, some people call it fractal. Some people, it's multi-time frame. It's looking across multiple time frames, and it's looking at 3 different criteria. It's looking at momentum, it's looking at trend, and it's looking at money flow. It's looking at these 3 things. And if the momentum is moving up, for example, if it's bullish on 3 different time frames, and the trend is moving up on 3 different time frames, and the money flow is moving up, then the likelihood that that trade is being driven by institutions is extremely high. Well over 95, 96% likelihood that the institutions are driving that. So that's how the Compass system finds this stuff. Now, what I want to kind of look at here, let's see if we got a question here. That's a good idea, a good question, Kenneth. So if you take 20 or so trades in a month, going with 2,000 in each trade, how much do you need to have to enter into the month? Not just 2,000, obviously, but typically I would say that if you need I probably have at max 4 to 6 trades on at the same time. So you would probably never have more than 4 to 6 trades on. You don't have to take them all, of course, but most of the time there's only I think we got like 2 trades or 3 trades on right now. but typically it never goes over more than 5 or 6 because we're taking them on, we're taking them off. So that's if you're trading with just if you're trading with only 5 or 10,000, yeah, you can, obviously you're not going to take 2,000 a trade. But if you're trading with less than 25,000, you're also probably under PDT rules, which is pattern day trade, which means you can't take more than 3 intraday trades in a 5-day period. But most of the trades that I put out, the things like time spreads, put credit spreads, weekly ATMs, anything we do like that, and most of the trades that we take, they can be held overnight. And remember, the daily chart has to align with the 5-minute chart. So when I take a trade, even if I get in, let's say I get in 11 o'clock in the morning and I close it out at 3 o'clock in the afternoon for profit, and you can't do that because you're under PDT rules, remember that the daily chart was bullish. I would never take a trade. I never get into a trade that I don't feel like could be taken overnight. So every trade I take has the potential to be kept overnight, which means if you can't get out of it, you can still hold on to it overnight. And a lot of times you'll do better than we did. Okay, so this is, I'm going to get into some Fibonacci and the compass system first. This is the compass system. This is a compass chart. This is a Tesla. This is a trade we took here. I've done 2 things here. I've shown the compass chart, and I've showed the indicators, and I'll let you know what they are. But I also used Fibonacci candles on here to show you this Tesla trade that we took. This is pretty old. I think this is back a couple of years ago or something, but it still shows the same thing. But the indicators that are on here, this is the long-term trend right here. The short-term trend, by the way, is identified by this thin green line. This is a 15 EMA of an EMA. This is a long-term trend. This is an important line right here. This is multiple time frame momentum. And this is current time frame momentum. These 2 lines, this is showing multiple time frame. This is showing current time frame momentum. And this is money flow. Now, you notice how they're all green. They can either be green, blue, yellow, or red. Green and blue are bullish, and we'll see a lot more of these, and yellow and red are bearish. But this was a Tesla trade, but this is a Fibonacci candle. I'm going to get into Fibonacci candles. You see these dojis right here, this compression, and you see these flat bottoms. These candlesticks have flat bottoms on them. That's what a Fibonacci candle looks like when it's a bullish reversal. And these pink arrows here are created by the compass system as what's called pop out of the box or pop signals. This tells you when a stock is breaking out of compression, and it gives you a nice indicator in there. And this shaded area is also what's called a dynamic compression zone. These are created by the compass system, but that's what it looks like. And this is the indicators. But I want to go through Fibonacci first before we move too much further. So again, we're going to talk about Fibonacci candles right here, right now. And somebody said, Raj, you purchased Compass, but it looks different. I don't have the arrows and the RLT confirmation at bars and don't have compression zone highlighted. What can I do? Call, you need to check, you need to just call Rightline, talk to Sergio, set up an appointment for Sergio to look at your machine, because he's got my layout. And if you don't have it, then he can put the original, he can put my layout on there for you, and it'll look exactly like mine. Just make sure that you let him know that it doesn't look the same, and he can get he's got my latest version, so you'll get that. All right, so to talk about Fibonacci candles, what are the advantages over the standard candlesticks? It identifies confirmation of trend reversal. This is one of the most important things right here. Remember, we were talking about you don't want to chase a trade, wait till it pulls back to confirmation. It identifies confirmation of trend reversal. It allows trade entries on a confirmed reversal, avoiding failed breakouts. How many times you ever try to enter a trade and have it breaking through a resistance level to the upside and have it reverse and fail on you right away? By using Fibonacci reversals confirmations, it's going to reduce that likelihood of occurring. It smooths out the price movement to eliminate noise in the market, and allows traders to stay in trends longer, avoiding shakeouts. This is can be really important. How many times have we got out of a trade and then said, I should have stayed in it, because it pulled back for 1 5-minute candle and moved right ahead again. Fibonacci would not have got you out in those situations. And it also identifies waning trend momentum. When the momentum is starting to fade,
you can identify it and you can exit for your profits. And it makes it much easier to visualize the current trend, as we had seen in that Tesla chart. All right, so if you haven't used Heikin-Ashi in technical analysis, you might want to try using them. Again, they don't cost you a thing. Everybody has them on their charts. And Heikin-Ashi means average bar in Japanese. And it did. It smooths out the price action, so identifying trends and reversals is clearer. Bullish Heikin-Ashi candles have flat bottoms. I'll show you those. And bearish Heikin-Ashi candles have flat tops. This is a little different from regular candlesticks. Typically, if you look at a candle and a regular candle and has a big wick on the top, you think that that's kind of a bearish thing. But the buyers came in and then the sellers come in and drove it down. That is not the situation with Heikin-Ashi candles. Heikin-Ashi candles with big wicks are actually more bullish than ones without them. And the bearish ones have flat tops. All right, so we'll show you that. So a reversal in a bullish trend is going to have a flat bottom Heikin-Ashi candle, followed by like a doji Heikin-Ashi candle, followed by a flat top by Heikin-Ashi candle bearish. That would be the reversal. And I'll show you these. It'll be much easier to see when I talk, when I show you. One of the things I do want to mention is in Heikin-Ashi candles, if the current trend has been coming down with like big red candles, big red Heikin-Ashi candles, and you get a reversal, but it's just a tiny little green Heikin-Ashi bullish candle, you want the candlesticks that are for the reversal, you want them to be big enough to overtake the big candles coming down. So you would want a big green Heikin-Ashi candle. You might have to wait for 2 candles or something to get that. So again, yeah, I trade these a lot. I have a really high win rate with these things. All right, we're gonna go in and look at these. Now this is just a graphic of these are Heikin-Ashi candles, just to explain what they look like. This candle right here, this is a flat top candle, so that's a bearish Heikin-Ashi candle. And then we get some wicks and tails, and then a flat top again. See, without any wicks on top. It's not really a bearish reversal. This is a Heikin-Ashi confirmation of a continuation. This is a bearish trend that's confirming, because we went from a bearish candle to basically wicks and tails to another flat top. So that's a continuation of the down move. Now, you notice it continue on down. Then we started getting green candles with wicks and tails, and then we get a flat bottom green candle right here, right there on that spot. That is the Heikin-Ashi reversal candle for going long, right there. If you don't, no wicks, no tails, flat bottom. Right, so that's giving you the location. Now, interesting thing to remember is each one of these candles starts in the middle of the previous candle. It's always going to start in the middle of the previous candle like that. And so don't be confused by that. That's the way it is, because it takes 2 candles to create a Heikin-Ashi candle. So there is your reversals on the bearish side and reversals on the bullish side. Okay, all right, so this was Tesla. We looked at this one already. Let's go to, this is a more recent one. This was the one we did in Gilead not too long ago. This is a daily chart. This is the compass system. You notice all green. This tells me, as soon as I see that, I know that the institutions are in buying this thing. I mean, I don't have any question that the institutions are driving this trend. This is a bullish Heikin-Ashi reversal. So you've got here, you see, you've got this compression that's going on. And then you go to this flat bottom candle right here. These actually have little tails on them. This was a flat bottom right here. And we also had a Heikin-Ashi reversal here. We actually had a Heikin-Ashi reversal here. But this is the one I took on this particular trade. All right, so this was Heikin-Ashi reversal on GE. Fairly recent, by the way. This was not that long ago, end of January. But we got a Heikin-Ashi reversal. Now notice how much chopping around here. And you notice we're getting some color changes in here. But on here, we had some yellow, and then we went to green on the current time frame momentum. The multi-time frame momentum stayed green the whole time. Now the trend went from green to yellow, but the trend is getting impacted by this choppiness. And I'm trying to kind of front run this a little bit, because
all my momentums are strong. So we took this, we were in this about, I don't know, about 3 or 4 days, and we took a nice profit in this coming off of this Heikin-Ashi reversal candle right there. I know some of these are a little hard to see. This is my TC2000 charts. This is kind of Heikin-Ashi on the TC2000, so you can also see, because I have some other indicators on here. This is the 8 exponential moving average right there. But this is a line that I draw. This is called an algo line. This is a line that the institutions use. And when it broke out above that, and I got a Heikin-Ashi reversal, if you look at that, you can see these. You see these tails, flat bottom. That's the Heikin-Ashi reversal right there for IBM. It was a beautiful trade, a beautiful Heikin-Ashi reversal trade right there. This is Teva. This is on TC2000 as well. See the Heikin-Ashi reversal. You see the tails on these candlesticks, followed by a Heikin-Ashi reversal. And I color my candles differently. I have, instead of green, when it's blue like that, it means that the Bollinger Bands are expanding. That tells me that it's breaking out of compression, which gives you a little bit more of an edge, just like this one back down here did. So there's the break on that, and flat bottom. You notice, so flat bottom, flat bottom, flat bottom, flat bottom. Easy to spot the trend on that trade right there. And we took that on Valentine's Day, as a matter of fact. All right, so I'm going to look at some Heikin-Ashi charts on TC2000, because I picked a few out from Friday, so that we would have something to look at to let us know. Now this is Heikin-Ashi. This is my TC2000 platform that I use for charting. And here's CAVA. This is the regular chart on Kava right here. And here's my Heikin-Ashi chart on Kava right here. See the Heikin-Ashi reversal. Not really hard to spot here. And remember, I said when you get candle, you need a big candle. You've got a big candle here that's moving up on this thing. You see how it's just kind of chopping with all these wicks and tails. Then you get a flat bottom. You go back a little further. See this is bearish here. Flat top, wicks and tails, flat bottom. See the nice move, flat bottom. You see how it moved up. So this is what it looks like. Here's one from Friday. This is Zim. Nice move in Zim here. We had a Heikin-Ashi reversal here, which you could have caught. I wouldn't have taken it because I had too many moving averages here. This pink line is this purple line here is the 200, and the red one's the 100. But you see how it broke it through with a Heikin-Ashi reversal right there. There's a tail and a flat bottom right there. Right, so that was a Heikin-Ashi reversal on Zim. That would mean these are potential for Mondays to take them. There's TCOM, same thing, a nice reversal right here, moves up, kind of chops around, Heikin-Ashi reversal here, moves up, we get a doji, another Heikin-Ashi reversal right here. So a nice setup on TCOM. Ball is another one, big move here. Probably had earnings. Yeah, I had earnings in 426. So you get these big candles. You're going to notice on Heikin-Ashi, you notice no gaps, right? You don't see any gaps because it takes 2 candles to do it. Here's your gap and ball right here on Friday. But if you're looking at the Heikin-Ashi, it's pretty obvious that this is a pretty strong reversal right here. NVIDIA. You did a Heikin-Ashi reversal here. Now the candle's green. It's not blue, but it's still a Heikin-Ashi reversal. So that's a pretty nice reversal. Back here and see NVIDIA right here. You see the reversal here, and you see how the stock just, once that reversal took place, see what a nice run you had on that one. And a couple more I want to show you, and we'll get into some more trades. This is ERJ. Nice run, nice move here on ERJ. This on Friday. That's Heikin-Ashi candles. Here's the regular candles. As you can see, it's breaking out, trying to break out. It hasn't got above here yet, but I'd be very cautious, but I would be very interested in this trade because of that, because it's had such good results in the past. You see this reversal here? See how that moved up? See that reversal here? See that moved up? It's very rare to get a Heikin-Ashi reversal and not get a little bit of at least a couple of days worth of follow through on it. It happens, but it's not very common. There's Dell. That's another good one. Again, wick and a tail, flat bottom. I hope you can kind of get in the idea of what they look like. Another one, Pega. Nice move here. Notice this big move that it made over here, but that was a nice move in Pega. That's a Heikin-Ashi. There's the regular candle. The red line's a 50 SMA. It's breaking above that. Bullish stock. It's a bullish setup. So this is the kind of things, again, we go over this in the room. When I'm looking for trades, I'm explaining this to everybody so they can see the same technicals that I'm using for this. And one last long, and I got a couple of shorts to show you. URI, United Rentals. Pretty nice smooth down move here. Getting some wicks and tails. We got a Heikin-Achi reversal right here, but it was green. But right now we had another Heikin-Achi reversal on Friday. That's a nice one right there. Look at the regular chart. This is what you're looking at. See how it's above the 50-day moving average. Nice setup on URI. All right. A couple of short ones. VeriSign, nice short here. VeriSign, big pull down. That's Heikin-Achi candles. There's regular candles. See this choppiness? You switch over to Heikin-Achi. Look at how smooth you can see this downtrend right here. And that's a pretty big move in VeriSign. Now, WST is also a short setup. You can see the Heikin-Achi reverse right here. Wicks and tails, flat top. Nice move in WST. If you look at the regular candles, that's what it looks like. Sorry for all these little lines on here. These are specific support and resistance levels I've got. But so that's Heikin-Achi and WST. And that's it, I think. Yeah. So those are the Heikin-Achi candles. That's the Heikin-Achi setups. And I just wanted to show you some live charts to show the ones that are there. Raj, do I use a scanner? What time frame do you use for swing trades? Well, for swing trades, I look at the daily chart. Any kind of swing trade, I use a daily chart. And once I've got a bullish setup on the daily chart, then I go to as far as my entry is concerned, I'll use a 5-minute chart to try to find the best entry based on the 5-minute chart, but I'll be using my daily chart for any kind of exits I take. In other words, if I get into a trade in a 5-minute chart with a bullish daily chart, I'm not going to exit on a few red candles on the 5 minutes during the day. I'm going to wait till the end of the day to make sure the daily chart's still bullish. Do I wait till the daily reversal HJ candle completes before entering a trade? A couple of comments about that. When a Heikin-Achi candle is reversing, in other words, you've got a candle developing that has, for example, a flat bottom on it, so it's a bullish Heikin-Achi. Depending on the time frame you're on, if you're on a 5-minute time frame, once you're about 2.5, 3 minutes into that, then it's very unlikely that it's not going to finish as a Heikin-Achi reversal. It really will, but generally it doesn't. But typically, I'll wait for the 5-minute candle to end to complete before I'll get in. I'll wait for that reversal to be confirmed. Same thing on the daily chart. But if you're looking at a daily chart and you're getting a reversal during the day, and it gets to be like 2 or 3 o'clock in the afternoon, that Heikin-Achi candle is going to be bullish at the end of the day. It's very unlikely to end up with a tail on the bottom. Kenneth, excellent and clear presentation. Love that. When you can come up with the 2530, I'll get on board with you. Again, it's do I have an exit parameter set? I don't have stops. I don't put stops on my trades. I don't have any automatic stops in there. I just don't do that. It's too easy for people to see what they are, for the institutions to see what they are, and I don't put stops in because I'm entering trades based on the technical setup, and I'm exiting trades based on the technical setup. If the stock stays bullish, and it's bullish on the daily chart, even though it's pulled back, but it's above my support level, and I still get enough time on the options, I'm gonna stay in the trade. I'm not getting shaken out because I'm down 15 or 20% or something. I just don't agree with anything like drop. I get out when I'm down $100. Get out when I'm down 25%. If you enter a trade at one point and I entered at a different point, our exits are going to be completely different because our P&L is going to be different and our percentage gain or loss is going to be different. But we should both be exiting when the technicals break down, not based on P&L. Okay. Again, what automatically exit to take you out of a good trade that has gone your way? Well, when I'm getting out of a trade that's gone my way, I'm setting exit targets. It depends on This is really, really a very difficult thing to quantify because there's so many elements go into this. So much of it depends on what the market's doing. If I'm in an intraday trade and this market is chopping all over the place that day, and I get up 25, 30, 35% on the trade and the market's choppy, I'm going to take the profits because I don't have any kind of wind behind my back to keep that trade going. You know, if I think it's a good swing trade, then I might do it. But right now, we're not in a swing trading market. So those all go into the decisions on that. All right, so I'm going to look at we looked at some charts. We're going to look at these are some of the charts that we've taken lately. And I just want to go over the compass system and how we find these high probability trade setups so that you can see what they look like and when we took them. Again, here's the compass system on ThinkorSwim. All right, and again, you don't have to have the compass system. You can just be in the room. Or on the alert. You're gonna get the trades. But a lot of people like to know where these trades are coming from. So I think it's important that people understand when they get a trade that what were the criteria that made me get into this. Right. So this was workday. All right. So you can see here we're getting some choppiness here. You notice we're getting some yellow, blue, yellow, blue. But what I did was I took it right here. Actually, I took it right here. This arrow should be one back. When this went to blue, and this was already blue. So I took it right here because it was coming out of this compression. Now, this thing went to yellow, so I had to be very cautious when this happened. I had to be very cautious. Now, these are Fibonacci candles, so I had to be very cautious, but it didn't really pull back. It stayed pretty nice. And then I got this dynamic compression zone here. So I was getting a break out of that. So I felt pretty comfortable with it. This had gone to blue now. On the current time frame was blue, so I was happy with that. Then we went to green. This chopped around a little bit, but this stayed green. And for an intraday trade or an overnight trade, this worked out fine. So we were in this thing for 5 days, and we took 30% profit in 5 days on workday. And this was MDT. Again, compass system. You can see the institutions are buying. Notice this went from yellow to blue right here. We get in right here as it came off the 15 EMA. That's a support level. And this is where we entered right here, and this was 25% of this MDT. Get out right here, institutions were still in there buying. VKTX, 30% in 3 days. Everything's green. Institutions are buying the heck out of this thing, and we buy it right here, and we wrote it up. It didn't move up really fast, but we did take 30% in 3 days in this. So options leverage it pretty nicely for us. McDonald's, this was an overnight trade. We get in here, we get out here. Couple things, you see that the institutions are buying, but notice the institutions are buying, but notice how the stock's not going anywhere. This tells you that the institutions are in there, but the stock price is going sideways, and people say, why isn't the market going up? Why isn't the stock going up? Just because the institution is driving it doesn't mean that it's going to get bid up right away, but it tells you that very likely it's going to occur, which it did right here. And notice I waited until I got a break out of the dynamic compression zone, I pop out of the box symbol, took it overnight, in for 8:30 right here, out for 11:30 the next morning. You see how it reversed back down again, but the institutions are still in there. But I took the profits. Moderna, this was a nice profit on a 33% profit on this drop right here. See, everything is either red or yellow. It's bearish. Institutions are selling. Took it right here as it broke off of this compression and just took a 33% profit very quickly in that one. Amazon, same thing, 32% profit. Institutions are in here. We did have some yellow on the long-term time frame, but that's because we have so much chop here. And I figured it was likely to go to green, but I was happy with the momentum on here. So this tells me that the institutions are in there buying. And this is the 2 key lines that I key on. All right, and JD, same thing, pulled down out of dynamic compression right here. Everything went from green to yellow. Everything was red. 61% profit on this trade. Really a nice trade on JD. Dollar Tree, same thing. So you can see this over and over again. Same kind of information. Institutions obviously is selling this thing. When you look at a chart like this, you know that they're selling it. We grabbed it right here and we just took a quick 25% profit in Dollar Tree. Datadog, same thing. Red and yellow. Institutions selling, coming out of dynamic compression. Take it here out of dynamic compression, 21% profit. Crowd, same thing here, 20% profit. Very choppy. I have to be more cautious when I see this, but I like this current time frame momentum on the daily chart looked really good. And everything else was fine. We took it right here for 20% profit. Amazon, this was a daily chart. Now, this is a 32% profit in 45 minutes. See this compression? Everything was green down here. The long-term trend was yellow, but everything else was green. Again, these are my two key lines, or two levels right here, two indicators right there. And it comes off here with a pop out of the box signal. We took it. We were in this thing for 45 minutes and took 32%. That's why I like taking, if I can get 30-35% an intraday trade, I've taken the risk off the table and I've banked the profits. This, by the way, this is the VWAP. This is what I was talking about. This is a 5-minute chart. We'd only, when your stock price is below the VWAP, you're only going to go short, and you're only going to take it in stocks that have a daily chart that's bearish as well. But this was stock moving sideways. We took it right here in this pop out of the box signal on the ENPH to the downside, and we rode this thing down for an hour for 20% profit. Again, institutions are all selling. Verizon, this was what I like to keep this up because this is really kind of shows you how powerful this thing can be on some of these stocks. Verizon is an inexpensive stock. It doesn't move a lot. Obviously, so we were able to get into in the money. Now I take all my options in the money. And this was an in the money call, in the money put that I got next week's expiration, and I paid 45 cents for it, and it was in the money. So I paid 45 cents for it, and we get out in 1 hour, and that 45 cents went to 67 cents. Now, people say, well, that's not very much. Yeah, but if you bought 10 contracts, it was $450, and you get out at $670. It's $220 profit in an hour off of a $450 investment. That's pretty good. This was a SPY. This is a super system setup right here on the SPY. We took it as it came off of the 15 EMA, basically the short-term trend right here. As it broke down, everything went red. We took it here, and this is where we take the trade, and we write it down, and then we get out pretty quickly. But these are fairly quick trades. Notice it's below the VWAP, by the way, very important. And Netflix, 20% profit here on a nice breakdown. Again, this went from blue to yellow. Everything was yellow or red. 20% profit in Netflix. This is a 5-minute chart. Notice it was breaking below the VWAP. We didn't get in until actually the price got below the VWAP. And Tesla, this was a 30% profit. Nice trade here. And this was Tesla overnight. We actually take some overnight trades sometimes. This was at the end of the day. We had a pop out of the box signal, end of the day on the 5-minute chart. Stock was trading below the VWAP. So we took it short. We took some puts. And this we get, sometimes you get lucky. The puts exploded. The stock fell from 120 to 112. And I think I put stock options went up about $7 a contract overnight. Pretty big move. And now we've seen that one before. And this, I just want to show you how I use a daily chart and the 5-minute chart together. This was QSR. This was a daily chart. This is an older trade, but I just want you to see that this is a daily chart and everything was green. So I liked QSR here for a long. This is the daily chart. This is a 5-minute chart. This is when I was trying to decide when to get into this long trade. So you see we got the stock moving sideways, and right here when I get a pop out of the box signal and everything's green and blue, I take it right here. Now I went to yellow. I had to be cautious when I saw that, but immediately reversed back to green again. We get in here, and this is the 5-minute chart. So this is how I use to trade to get into a 5-minute chart based on the fact that the daily chart was bullish. And there's where I'm talking about the 5-minute chart and the daily chart align. The pink line's the VWAP. You notice it's bullish. We're above the VWAP. All right, so that kind of wraps up what I wanted to go over. This again, these are the strategies that we use in the room. You'd be seeing straight calls and straight puts. You'd be seeing debit spreads using weekly options expiration, time spreads over earnings, which we're going into right now. We're starting to do some time spreads here. So that's to capture the volatility crush, non-directional trade. Weekly ATM strategy to capture premium week after week. Really a nice trade, a nice strategy for a neutral to bullish market. This is neutral to bullish on here. Obviously calls and puts, we don't care. We go, if it's a weak market, we go with puts. If it's a strong market, we go with calls. And the credit spreads, we can't do credit spreads right now because the market is too weak. And then the SPY super system, which do not get alerted but they're called out in the room. I'm also working on a strategy for strangles that I talk about in the room, which has been extremely successful so far. Just started to put it together since January, 87% win rate, about 170 trades so far, and really working well. So we've been using that in the room, and if you come into the room, you'll get introduced to that, and you can trade that. Hard to do it on alerts because it's so quick, but right now we're just doing that in the room. All right, so that's the Compass Alert Service and the Compass System and the options room. So those are the options that you've got. These are the offers for these. The alert service itself is 50% off today, so $9.98 for a whole year. And you saw some of the results we were getting with the month by month. So it's a pretty good deal. And you can do it quarterly for $3.96. You want to put, if you go in here, there will be in the chat box, there's links to all of these offers we're going to show you here. But that's the alert service. You get all, by the way, when you take the alert service, you get a free month in the trading room. You'll get the Discord and chat. We have a Discord room. We have 2 other professional traders in there. You'll get the text alerts, of course, that are in the alert service. And then I have about 27 videos right now on trading options that go over the indicators on the Compass system. It goes over the strategies we use to find the highest probability trade setups. So you get a lot for that. And again, you get in the room for a month for free for that. If you join the trading room at $11.98, now the trading room includes the alert service. So you get the alert service as well as the room if you join the room at $11.98 for a year, 50% off, and $148 if you want to do it for a month. I don't really recommend a month because it's not really enough time, but people like to try it, so that's fine. And you obviously you get the trading room access. You get the alerts. You get the chat room as well, the SMS alerts, the chat room, and you get obviously all the videos that I produce. And then on the Compass system itself, if you want the Compass system, the software that goes on to your ThinkorSwim or your Ninja platform, you'll get a month in the trading room for free if you buy Compass. You'll get the Discord chat. You'll get the alerts. You'll get all my videos. And you'll get scanners we put out. I have several scanners in the room that we use. And you'll get my Workspace, the one we were talking about before that somebody said theirs looked different to mine. Rightline will put that on there for you. Generally, mostly Sergio will do that. And he'll put that on your computer. You don't even have to deal with the technicals of it. He'll just take over your machine, load it up there. It'll look the same as mine. So those are the 3. And again, if you have any questions, you'd like Rory to get back to you to answer some questions, anything to do with purchasing or questions about the software or whatever, just put your name or number in the chat box or in the question box, and that's his number right there. All right, and we got a bunch of testimonials and stuff. I'm not going to go through all of those. So those are what you get. The alert service, 50% off is what you want if you want the year. Same thing with the trading room and the Compass system, same thing. So let me just see if we've got any other questions. I know I've taken quite a while here, and I did get into probably maybe a lot more detail, but I try to, be as complete as possible. Raj, what's the difference between multi-time frame momentum and multi-time frame? It's not modified. You've got multiple time frame momentum and current time frame momentum. If you're looking at like a 5-minute chart, the current time frame momentum is going to be based on the 5-minute momentum, and the multi-time frame momentum on a 5-minute chart is going to be based on looking at 3 of them. It's going to be looking at the 5, the 15, and the 45 all together. They all have to be trending in the same direction as far as momentum is concerned. John, you're welcome. Appreciate it. Appreciate you liked it. Thank you, Raj. Thank you very much. So see if any other questions. Otherwise, I'll wrap it up. I know it's been a kind of a fairly long presentation, but I did want to spend some time on the Heikin-Achi candles. I think that adding some information. Again, the Heikin-Achi is, you can put that on any trading platform you've got right now, any charting platform you got right now, and you can use that, what you learned today, in your trading on Monday. It doesn't cost you a thing. So appreciate that. And thanks, everybody. And again, look forward to seeing some folks in the room and on the alert service come the first of the week. Have a great weekend, everybody.